Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. South Korea's top trade officials are returning from Washington after wrapping up a second round of high-level tariff negotiations with the United States. According to the presidential office, Policy Chief Kim Yong-beom and Trade Minister Kim Jung-kwan are due back in Seoul on the 24th. The two met again with U.S. Commerce Secretary Howard Lutnick just days after their last round, focusing on what Kim had described as one or two remaining issues. While Kim said there was some progress, he made clear the talks are not yet in their final stage. So to break down what's at stake for Korea's economy, businesses, and broader strategic posture amid this, we are joined by Chai Sangmi, Professor of Business Administration at Ewha Womans University. A big welcome.
Hello. Thank you for having me.
Thank you for joining us. And also joining us online is Hwa-gyun Kim, Professor of Banking and Finance at Texas A&M University, Mays Business School. Good to see you.
Good to see you again.
So let's start a discussion with Professor Kim. So earlier this week, like I've said, Policy Chief Kim Yong-beom and Trade Minister Kim Jung-kwan flew to Washington again for follow-up negotiations, which is just a few days after returning from their last trip. So given the pace, what does this urgency actually tell us about the current negotiation dynamic and what could have changed?
Well, obviously, this type of the rapid-fire diplomacy tells that we're sort of seeing the negotiations in real time. And also, maybe there's some negotiations, right? There's some critical reflection point. So obviously, they mentioned that there's some partial progress and they're ready to come back again to do additional negotiations and deals. And still, there are certain parts not fully resolved yet, and that's actually what they're saying. So, I think of course, the several possibilities exist, but there's likely that, some hard deadline, such as like APEC, I think, driving these talks, or some other domestic or political calendars on both sides, or maybe there's some last-minute complication in terms of either big agenda item or some small technical issues. We don't know yet. And this type of things probably just lead the high Korean officials to come back. And of course, what's particularly telling, I think, that the same people, the both of them actually went there to talk. So it is probably not just about trade or tariff, but I think more like I would say broader economic and strategic the relationship between the two countries.
Right. Of course, there's a lot of things to negotiate between the two sides, but Policy Chief Kim actually pointed out that though there was progress, one or two contentious issues are still remaining to be unsolved. Professor Che, what do you think are these specific areas?
Actually, I see two main sticking points. First is the structure of investment financing, whether the U.S. will allow a blended model of loans, guarantees, and private funds instead of, insisting on all cash contribution from Korean funds. Second issue is the tariff and rule of origin framework, especially for electronic vehicles and core components like batteries and semiconductors. If those two areas are resolved, the remaining technical details should fall into place relatively quickly, I think.
Mm-hmm. And we'll be able to see that in the coming days or weeks. But during a press conference, Professor Che, Kim Yong-beom clearly said that South Korea has zero intention of signing any partial agreement timed to the APEC leaders meeting in Gyeongju. How might this positioning of Seoul impact the nation's negotiating power or credibility, especially if Washington prepares to announce something during the meeting period?
Actually, I think the Korea's message is very clear. It wants to be judged by the substance of the deal, not by the timing of a political summit. By refusing a symbolic or premature MOU, I think Seoul keeps its leverage and avoid locking in a weaker terms. Of course, Washington may want a feasible outcome in APEC, so the pressure will rise. But in the long run, market tend to reward consistency and principle, I think, meaning, Korea's credibility, not its flexibility, will define the success of each round, I think. Yeah.
Right, so we'll be able to see if this bold move was actually strategic. Now, meanwhile, there are reports that Washington is walking back its demand for a $350 billion all-cash investment from Korean firms. So from a financial and investor standpoint, Professor Kim, how significant is that softening? And do you think it could help unlock capital flow and reduce friction about the deal?
Well, of course, yeah. I mean, it's like a huge relief if it is going to be happening. But of course, this deal, the 350 billion cash, the deal, doesn't seem to be anyway super realistic. According to the recent Wall Street Journal article, the op-ed, this is a very Republican, minded, the newspaper, and they're saying that this is just unrealistic. And Japan is going to also um, delay the process as much as possible. And at this stage, South Korea is already paying probably like 25% tariffs on most of the things. So it's not like we're currently in like 0%, and then if the deal failed, then it's going to jump up to 25%. It's actually the opposite, actually. So 25% already paying, and if somehow deals made, then it's going to be 15%. So I think as time goes by, South Korea is going to, of course, it's going to have like damage, but I think it's going to adjust. So time is probably in South Korea's favor in some sense. So I guess the U.S. and also I think they probably know by now the resource constraint in terms of this the foreign assets the South Korea has. So even if they just keep pushing and asking if there's no further cash available, I mean, what can you do, right? So in that case, clearly this is going to be not like completely realistic. So it's probably going to be portion of cash that they're probably negotiating with. In this case, therefore, if the US is going to be softening their stance more actively, then I think it's going to be definitely helpful for Korea in terms of capital allocation. And also, therefore, it's going to be much easier for the US to receive the cash investment from South Korea as well. So I think there should be some good, the sweet spot of like this investment deal with cash, I think.
Definitely. So, Professor Kim, so all of these developments we're seeing, so the narrowing differences to signs of possible flexibility from Washington, when do you actually expect a possible, a largely finalized deal?
Well, I would say about 60% chance in favor of the deal. As we now see the the summit between the Trump and Putin also got canceled clearly, and we have seen in numerous events of like these deals like kind of failed right just before the summit or some of the major meetings in case of the President Trump's actually era. So I think we still have uncertainty here. Of course, the APEC is a very natural and nice deadline, and then it is very likely that I think President Trump is going to talk with the Xi Jinping and also definitely the President Lee, and therefore I think there's some good chance that they will actually have some multiple deals, at least partially, I think. But of course now the police chief actually is saying that we're not going to have any partial deals, so probably it's going to be not that easy unless like major deals are done beforehand. And probably that's why the police chief mentioned that they're going to come back again, even within this week window. So if that happens, I think that's probably because some of the major points are basically agreed upon. Otherwise, I think it's going to be probably after the APEC.
Right, so we could be expecting a longer process than expected. Now, let's also take a look at how businesses are responding. Hyundai has been aggressively increasing U.S. production and recently slashed EV prices despite 25% tariffs still being in place. Professor Choi, do you see this go-it-alone approach as a viable interim strategy or a sign that companies are losing faith in a swift resolution?
I think it's actually a bridge strategy. So like a way to hold the market share until the policy landscape clears. Hyundai is now expanding EV production in Georgia and offering deep price cuts, and these discounts to stay competitive. So I think it's yes, a cash squeeze margin, but the company is buying time and goodwill in the U.S. market. So once the tariff deal is reached out, then this local production and early pricing flexibility will quickly translate into stronger profitability, I think. Yeah.
So it's a gusty move by Hyundai, and one that could also set the tone for other companies as well. Now, assuming this tariff deal actually goes through, there's also talks that Korea and the U.S. may also unveil the so-called security package, possibly including revisions to the bilateral nuclear agreement and defense spending. So how would markets interpret such a bundled economic security deal? And would it be seen as a stabilizer or a geopolitical risk?
Both sides exist, but I think it's more like a stabilizer, obviously. So, I mean, at the end of the day, South Korea is paying hefty amount of cash plus probably other the investment. So the Korea should actually have some for return, and possibly the related to the nuclear, the the facilitations, and also some of the relaxations on developing or just using the nuclear submarines and all these kind of things would be definitely helpful. And especially nowadays, as I just saw the news, but then that North Korea actually also launched this, or to try this new missile, the supersonic one. So clearly they're sending signals that I think, we're ready or something like that. But I think clearly in response to that, if this type of the deals are made as a package deal and South Korea has all the technologies to do, and of course develop more efficient and as powerful weapons. So I think that's going to work as a good signal to both financial market and also the economic, the room. I think that okay, so I think it's not going to be easy for North Korea to do some the dangerous things or risky things, and that's usually a very good signal.
So this idea that we're talking about of tying economic deals to security agreements, it's actually not quite new, but Seoul seems to be doubling down on it. Professor Choi, what long-term risks do you see in this bundled package?
I think there are three risks. First, policy dependency. I think a trade and investment decision become hostage to security dynamics. And also, second, the supply chain concentration and retaliation risk. Over alignment with one block invest, is a like a countermeasures from the others. And third, on market volatility, every political shift triggers pricing swings for the firms. So while economics and security linkage can strengthen alliance, they also deem the clear boundaries and independent, channels for each policy track, I think.
So there still remains a lot of risks on that too. Now, let's also consider the possibility that a deal actually doesn't materialize before APEC, which many experts are saying. So in that case, then what kind of financial or investment contingency measures do you think South Korea's government and corporations should be ready to activate right after the summit, Professor Kim?
Well, if the negotiations fail to produce a deal by APEC, I think the Korean government already probably is preparing for that type of the contingent strategy. But on the government side, I think I just saw the Bank of Korea also the hold interest rate this time, and the Bank of Korea is trying to do extra things to just provide enough liquidity and also just make the market stabilize in this case, because I think the exchange rate volatility can go up, and also there's some sort of swings of the financial markets, the prices, because of that. Although maybe if many people already expect that it's not going to be completely done, then I think that will be reflected in the stock price and things like that. But I saw that stock price actually has been going up. So I guess either this one is not going to be that important, or they think that it's going to be somehow just the deal's going to be made, even if it's not by the APEC, but I think not by a long shot or something. So that's probably what it is. For corporations, obviously, the priority should be given on supply chain diversifications and also some of the extra burden because of the tariffs, continuing tariffs and things like that. So I think that can affect obviously the again the foreign exchange market as well as the other types of the supply chain issues. So overall, I think it's going to be kind of coordinated movement between the government and corporations, I believe.
Right, so the kind of scenario planning would be essential since many things are still in flux. And finally, before we conclude our discussion, so if, we're still speculating, if a breakthrough is announced in Gyeongju, APEC, what would count as a meaningful breakthrough for South Korea? Would tariff relief alone be enough, or would a broader package be the true indicator of a success, Professor Che?
I would define a win through four benchmarks, and the first one is a clear tariff roadmap. So ideally, a pause or partial rollback of the 25% outer tariff plus carve-outs for key components. Second is flexible financing terms, moving away from all cash demands toward, blended investment mechanism. And third could be a financial safety net, like bilateral liquidity or swap line for stability. And finally, a verifiable implementation system that, separates trade progress from political events. If all four appears in the deal, that would mark a comprehensive success and far beyond the simple tariff relief.
Right, definitely. So it's not just something about signing something, but about securing outcomes that could actually move the needle moving forward. I'm afraid we'll have to conclude our discussion here. Thank you so much for your insights, Professor Che.
Thank you.
And Professor Kim, of course, we really appreciate it.
My pleasure.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.